Good afternoon. Thank you for joining us for this press conference to present the financial results for the first half of the fiscal year 2016. I'm Jonathan Adishak, Vice President for Global Communications and Chief Communications Officer at Nissan. Today, details of the financial results will be presented by co-CEO Saikawa, and after that, we will take your questions. Please note that this press conference, including presentation and Q&A session, is being broadcast live on the internet. Now we will have our presentation from Saikawa-san.
Ladies and gentlemen, good afternoon. Thank you for joining this session. I would like to talk about the major results of the first half of the year, as well as the business highlights, and receive your questions. For the 6-month period to September 30th, consolidated net revenues decreased 10.3% to 5.32 trillion yen. Due to the negative impact from foreign exchange rates, operating profit totaled 339.7 billion yen, and net income totaled 282.4 billion yen. Free cash flow for the automotive business was 364.1 billion yen, and we ended the period with an automotive net cash position of 1.3 trillion yen. This deterioration year-over-year came from unfavorable forex, and our operational efficiency improved year-over-year largely. On the next slide, you'll see how much we have made a progress and improvement. On constant currency basis, net revenues and operating profit are shown here. On the left, this is what we submitted to Tokyo Stock Exchange, and on the right, you'll find the simulated figure. On constant currency basis, net revenues would have shown an increase of 3.2% to 6.12 trillion yen, while operating profit would have improved 31.5% to 519.5 billion yen. As you can see, operating profit margin is 8.5% on constant currency basis. Unfortunately, the year-over-year deterioration coming from unfavorable forex impacts were not completely offset by improvements in underlying the business performance. During the 6-month ending September 30th, global total industry volumes and financial results and the full year guidance will be presented now. The global total industry volumes for the first half of the year reached 44.7 million units, an increase of 3.5%. Nissan's total unit sales were 2.61 million units, a decrease of 3,000 units. But the sales shortfall in Japan were not completely offset by the rest of the regions. However, we remain sufficiently confident in our second half performance that we are maintaining our sales outlook of 5.6 million units on the full year basis. We have a strong product lineup for the second half to help us reach this target. Okay, looking at major regions. In Japan, TIV fell by 1% to 2.31 million units. Nissan saw unit sales decline by 20.2% to 211,000 units, resulting in a market share of 9.2%. This is mainly due to the fact that we had to stop sales of the Days and Days Roox minicars in the first quarter. In early July, we resumed sales of the Days and Days Roox minicars. At the end of August, we launched the all-new Serena. We have received almost 30,000 vehicle orders so far for the new Serena, which significantly exceeds the planned pace of 8,000 vehicles per month. Encouragingly, over 60% of new Serena customers opted for ProPilot signaling, promising demand for autonomous drive technologies. In China, where our performance is measured on the calendar year basis, and you see the figure between January and June. And TIV was up by 8.2% to 12.31 million units, and Nissan sales increased 3.8% to 610,000 units, representing a market share of 5% for the half. For the 9-month period to the end of September, between January and September, our China sales reached 929,000 units, which was up 8.2% versus the prior year period. We are increasing the tempo, but we are behind overall TIV growth. There are two factors here. One is low demand for light commercial vehicles, where we have a high level of market share. Comparatively speaking, LCV market is falling compared to PV market. And the second factor is the rapid growth of the local brands in the passenger vehicle markets. And our Venucia brand could not keep pace with the strong growth of other local brands. These are the two factors for the decline. In the United States, TIV was down 0.8% at 9.03 million units, but Nissan sales rose by 3.7% to 783,000 units, equivalent to a market share of 8.7%, amid strong demand for Rogue, Altima, and Maxima. In Canada, sales rose by 1.4% to 74,000 units, resulting in a market share of 6.7%. In Mexico, we remain number one with unit sales increasing 14.8% to 191,000 units, equivalent to a market share of 24.7%. In Europe, including Russia, our sales totaled 362,000 units, resulting in a market share of 3.8%. Excluding Russia, sales rose by 4.4% to 319,000 units, which resulted in a market share of 3.6%. As you may know, in Russia, the market continued to be impacted by the weak ruble and economic uncertainty. But the European market, excluding Russia, is declining year on year. This is mainly due to the underperformance in the B segment, which is for the compact cars. Towards the latter half of this year, we are expecting strong sales of the all-new Micra, which we have announced at the Paris Motor Show. In other markets, these are other markets, our sales decreased by 4.9% to 382,000 units. Unit sales in Asia and Oceania decreased 0.1% to 168,000 vehicles, and sales in Africa and others totaled 41,000 units, down 18.4%. In Latin America and Middle East decreased to 83,000 units and 90,000 units respectively, but we outperformed those markets. Moving to the detail of the financial results. As with previous quarters, Nissan is presenting its financial performance under the equity accounting method for our joint venture in China. On this basis, consolidated net revenues totaled 5.32 trillion yen, operating profit totaled 339.7 billion yen, which equates to an operating margin of 6.4%. Net income was 282.4 billion yen, which represents a 5.3% net margin. Next page. This shows you the operating profit movement. As you can see in the chart right here, which is on the left to the middle of the chart, you see the operational improvements, mainly around Monozukuri and sales marketing, which are the true performance of the company. We produced a positive impact of 124.5 billion yen in this area. Unfortunately, on the right-hand side of the chart, 179.8 billion yen was the negative impact produced by the foreign exchange. So as a result, we came to 339.7 billion in operating profit. Without the negative impact by forex, our operating profit margin increased by 1.8 percentage points with compared to prior year. As I said, operational improvements are making progress. Next one. So this is shown. So far, I was talking of equity method, but now I'm showing you the management pro forma basis, consolidated proportionate basis of the joint venture in China, which we are measuring the Nissan Power 88 with. According to this basis, net revenues totaled 5.84 trillion yen. Operating profit was 412 billion yen. Net income totaled 282.4 billion yen. Automotive free cash flow was 408.1 billion yen. Next page. As I have done, we are impacted by the forex. If we exclude forex impact, as you can see on the right, operating profit margin was 9%. Now, let me show you the business highlights as well as why we are confident about the sales growth in the latter half of the fiscal year. During the first half, we continue to launch exciting new products as planned in the Nissan Power 88 midterm plan. Our new models have included new Datsun Ready-Go crossover in India and all-new Serena in Japan, the new Kicks in Brazil, the 2017 Pathfinder, the all-new Armada, and the new Titan half-ton pickup truck in the North America. For each of these models, initial demand is encouraging. And in the second half of the year, they'll have a full impact on our bottom line. And in the second half of the year, we will launch the new Micra, which we unveiled in the Paris Motor Show. This model will be assembled at the Renault plant at Flandre, France from December. And last week, we launched Note e-Power in Japan. It marks a big milestone in our electrification strategy under Nissan Intelligent Mobility. So we are counting on Note e-Power. And we have a renewed Rogue, which will contribute to the sales in the second half of the year. Next is about premium brand Infiniti. Here again, we continued the momentum. The unit sales in the first half rose 5.8% to 106,000 units. This was driven primarily by demand for Q30 in Europe, as well as QX30 and QX60 in North America. And Nissan has continued to build its brand profile. In the first half, we sponsored major sporting events, notably the Summer Olympics and Paralympic Games in Brazil, the European Champions League UEFA, and college sports in the United States. These activities help to lift brand visibility this year. According to the Interbrand survey of top brands, Nissan rose 6 positions and is now ranked 43rd in global brands. We also see the accelerating adoption of new technology as key to building our brand profile that will continue in the future. Next is about zero emission and zero fatality. We will realize these 2 zeros, and we are making efforts towards these 2 zeros. And Nissan Intelligent Mobility is the vision to make them a reality. This is one of the focal areas that we are putting efforts in. Nissan Intelligent Mobility is featuring in more new vehicles, such as the latest Serena, where we are offering ProPilot functions. This autonomous drive technology combines automated steering, accelerator, and braking to ease driver workload in heavy traffic on long journeys. We have been actively building partnerships beyond the traditional automotive industry to jointly work on further enhancing Nissan intelligent mobility. We, as the Alliance, recently announced a multi-year agreement with Microsoft to partner on next-generation technologies, including the Microsoft Azure, which is one of their intelligent cloud offerings. We, as an alliance, acquired Silphio, the French software development company, to accelerate the expansion of our connected vehicle and mobility services program. The other day, we announced the expansion of our alliance strategy by completing the acquisition of a 34% stake in Mitsubishi Motors for 237 billion yen. As part of the alliance, including Renault, we will target synergy and benefits through collaboration on joint purchasing, deeper localization, joint plant utilization, common vehicle platforms, technology sharing, and an expansion of the company's combined presence in both developed and emerging markets. We are also accelerating our 6-year partnership with Daimler through cooperation on the joint engine production in North America, as well as the cooperation on the production facility at Aguascalientes in Mexico. And next year, towards the end of next year, we are initiating the operation. And we also have a forthcoming 1-ton pickup production in Argentina. This is the outlook for the full fiscal year. We are maintaining our previously announced financial and volume guidance. There is no change here. Next is about dividend policy. Nissan maintains a progressive dividend policy reflecting our profitability and solid free cash flow generation, and remain committed to a minimum payout ratio of 30%. For the 2016 fiscal year, our previous projection of an increase in the full-year dividend to 48 yen per share is maintained. Earlier today, our board approved payment of an interim dividend of 24 yen per share to be made on November 25th this year. In summary, despite strong headwinds in the first half, particularly on the forex front, we have delivered solid business performance and financial results, leveraging improved operational efficiency. Looking forward, we are committed to growing our business in a sustainable way, delivering solid earnings, positive automotive free cash flow, and attractive shareholder returns. That concludes my presentation. Thank you for your attention. We are happy to take your questions. Thank you very much.
Thank you, Saikawa-san. Now we will move on to the Q&A session. If you have questions, please raise your hand. You'll get a microphone from the staff around you. Please ask your question after identifying yourself and your publication. Please limit yourself to 2 questions so we can answer as many as possible. Hoshi-san, from Nikkei in front.
Saikawa-san, I have 2 questions for you, co-CEO. One is about the United States. In the U.S. market, Nissan is strong in sales, whereas the TIV, the incentive is at a high level. And in December, there is a possibility of an increase in the interest rate. U.S. market is strong, but within the industry, Honda and Subaru are reducing the production of sedans to adapt to the changes in the market. How is Nissan ensuring the sustainable growth in U.S. and what are the challenges you face, and how are you going to sustain the growth in U.S.? This is my first question. Second question. Southeast Asia and emerging countries, in Nissan Power 88, these new markets were raised as a growth potential, but now it's slow. The market is slow. And now we have a partnership with Mitsubishi Motors. And next year, you'll have the new midterm plan in place. Based on these assumptions, Nissan Motor itself, in these emerging countries, how are you going to restore the operations? What are the challenges that you perceive today in these emerging countries? And what are the priorities that you are going to address after the second half of the year? These are the 2 questions I have. Thank you for the question. Starting with the U.S. With regards to U.S., as you may know, U.S. market, an annualized basis is largely exceeding 17 million units. It's at the level of 18 million units. It's at a high level. However, it's a peak. So we don't see a potential of further growth. In other words, we are foreseeing not slowdown, but rather it will hit the peak. That's how we perceive the U.S. market. According to the data, car makers are spending more incentives. And sedan market, among the sedan markets, B sedan is shifting to crossover and SUV. That's a reality. And how do we approach the market? As I said, in the comparing first half and second half of the year, what is specific to Nissan? In the first half of the year, we enriched our lineup, and this will have a full impact. In the second half of the year, we are introducing new products. And these new products will make a big contribution to sales. But as I said, the incentives is rapidly growing in the market, so we need to make sure this doesn't happen. While we may ensure the quality of sales, we need to boost the sales volume. With regards to U.S., this is a very important question, so I would like to ask our new Chief Performance Officer, and who is in charge of North America, Mr. Jose Munoz, is joining the session through the teleconference. So Mr. Munoz will give additional information. Jose?
Are you there?
Yes, indeed. Thank you very much, Saikawa-san. So I think your explanation is very accurate. So as you know, we have experienced a significant shift in terms of the evolution of them in the market. Not only the market has dropped, as mentioned in the first 6 months, by 0.8 points, but also we've seen a significant shift between cars and trucks. Fundamentally, trucks representing now 60% versus cars at 40%, roughly. Within this context, in the first half, Nissan has been more dependent than our direct competitors on cars. Basically, we rely more than 52% on car sales. Also, the incentives on the car segments have been increased versus last year, but also they are higher than trucks, which is something which is not normal in the past years. So coming to your key question on how are we going to do to offset this? Well, as Saikawa-san stressed, we have now a number of key products which are going to help us be able to grow in the markets that are growing. Namely, the new Titan half-ton. You know, for example, that in September, the full-size pickup truck was the second largest segment in the United States. Normally, this used to be the fourth segment, and in September it was the second segment. So the Titan half-ton is going to be key element to support. The other key product is the new Armada, which is also going to represent significant lift. Then we have the minor change Rogue, and also the minor change Pathfinder. So our plan is to gain share from both Titan and Rogue about 0.3 points each, and then we're going to get the new Pathfinder supported also by good Murano sales, 0.2, and Armada and the cars another 0.1 each. So also wanted to highlight that in terms of incentives, we've been trying to be very conscious. So at the moment, in the first half of the fiscal year, we've been running at 81% of industry average. And when it comes to the split between cars and trucks, in cars, we are actually a slightly lower level of incentive than Toyota, which is, I would say, healthy. And in trucks, we are starting to see the impact of supporting the sales of Titan. So I think we have a very strong plan for the second half, as Saikawa-san mentioned, which gives us some confidence. Our forecast for the TIV remains about 17.5 million, especially after we saw October SAR of about 18 million cars. That's it from my side.
今ですね、
Yes, as we explained, Mr. Munoz is talking about cars. That's the passenger vehicles. SUV belongs to truck segment. That's how we define it. Okay, moving on to emerging countries. Emerging countries, well, we can just generalize emerging countries into one definition. As I said in the past, we made a lot of investments in India, Russia, and Brazil, and Thailand and Indonesia. We largely increased the capacity in the first half of Nissan Power 88, and these countries are not growing as we assume, and that is why utilization rate remains low. But India, with regards to India, compared to last year, this year utilization ratio is rising largely. So in that sense, we are enjoying return of the investment, and there's further potential in the future. Of course, TIV will be growing. And as I said, the CMFA platform, Renault's Kwid is on this platform, and Nissan has Datsun Ready Go on this platform. And we enjoy strong sales with this product. In India, investment return, we are getting the return of the investments now. I'm not going to get into technicalities, but Brazil, finally, we are seeing a gradual sign of recovery. As I said, sales is gradually growing. Against such backdrop, when Brazil economy comes back and our new kicks, a new model, will put a full impact on our bottom line, this will give us an opportunity to get the return of the investment. How about Russia? Russia remains difficult. Eventually, when Russia's macroeconomy comes back, we have to make sure we gain the opportunity and be cautious until then. And the biggest problem lies in what you were mentioning, ASEAN. To be specific, it's Thailand, Indonesia. In these countries, unfortunately, compared to our initially planned growth, the reality is different. And there are two axes from which we are trying to restore the operations. Product introduction is one big pillar, but on top of this, sales network is being reinforced, and we are enhancing efficiency of the distribution network. This is about increasing the performance of the sales or the revenue side. It will take a little over 1 year to make this happen. So in the next new model offensive, we have to make sure our distribution network will be strong. After we complete strengthening the network, we'll be on the product offensive again. And in this process, Mitsubishi Motors' know-how, insights, and assets should be fully utilized.
Okay. Next question. Over here on the right. Second row.
NHK の
Yoshitake from NHK. Next year, the Shunto Spring Offensive wage negotiation, what is your position? In your financial results, because of the stronger yen, your revenue has come down, but you can ensure the operational profit of 400 billion yen. Keidan Ren, 700 billion yen, and Keidan Ren is making its position. So what is your position regarding Shunto stance, wage hike? Second question, presidential election in the United States this week, the result will be known. Depending upon the result, U.S. is the largest market for automotive industry. It may seriously impact the car companies. So how do you see the election? How do you see the presidential election? Thank you. Both questions. These are the matters not private to our company alone. So I will have to be, my answer will not be direct. Well, as we Japanese say, the ogres, evil will laugh when we talk about next year. But the Shunto, Spring Offensive, our position, large points. Of course, we are a member of the major industries of Japan. Naturally, it follows that the overall business revitalization is very important, and we should not we can't abort our efforts of maintaining the business cycle. Good cycle. That's one fact. But on the other hand, you know we have presented the result of the first half. So the full year outlook is explained, but the forex would be very big, and the economic headwind will be very strong. Jose Munoz, moment ago, said that the North American demand will be hitting, well, he didn't say peak out, but it is approaching peak. It will not increase any further. So next fiscal year, economic environment would be a little tougher. If even in that case, for us, the crude oil price, which is very important, market conditions will rise gradually. That is how we see it. Economic conditions, economic environment would become even tougher where other conditions may rise. So in this environment, to what extent can we do? That is what we are exerting our maximum efforts to study what we can do, identify. Now, U.S. presidential election. As you know, I don't know how to put it. Everybody's holding their breath to watch the outcome of the presidential election. Of course, there will be some impacts, but I have no words to describe. I'm not an American national. I don't have a voting right. So I will see the results, and only thing I will do will be react to the result. CFO Joe Peter has a voting right, the only member having a voting right of EC member. Do you have any comment?
The comment that I'd make is, we've seen and we'll probably see some volatility depending on how the election turns out. But, that's for the American people to decide. I think if you look at the U.S., it's a very strong economy. It's very resilient. And I have confidence that, over the normalization period that we should continue to see a good environment for us in terms of the automotive industry. Again, at a plateauing at a peak, that's attractive.
Thank you. Thank you very much.
Okay, next question. In the front.
Toyo Keizai Kigawa speaking. Thank you for the opportunity. I have a couple of questions. One is about China. Between January and October, the sales performance is a record high. It's more than 5.05 million units in TIV. The sales performance object is 3 million units, and you looking at the latest sales performance, and there's a tax incentive on the compact cars, and there's uncertainty here. Next year, of course, I'm not sure whether this policy of the tax incentive will continue. How do you see the Chinese market next year and onward? What's your assumption or projection as of today? And the other question is about UK. Sunderland plant. You have decided to introduce next generation Qashqai and X-Trail in the Sunderland plant. Having said that, UK. Exporting from UK to EU may be subjected to tariffs, and UK may not have an access to the single market EU. You talked to the UK government, although the details were not unveiled. Going forward, with regards to exports to EU, is there any risk that you assume? These are the two questions. Thank you for the questions. Talking about China. Looking at the latest circumstances in the market, it's a mixed picture, but it's steady and strong. In reality, as I said, in China, well, I wouldn't say, I'm not sure whether we can make a clear distinction here, but the growth is shown among local brands, Chinese local brands, passenger vehicles are growing largely. And this tendency will last for a while. That's how we project. Against such backdrop, naturally, we are putting efforts in boosting the sales of Nissan brand, while from the latter half of this year and next year, we are working on Venusia brand, which is a Chinese brand. So we want to boost Venusia brand. What will happen to tax incentive of the compact cars? It's very difficult to make a projection, but there will be an economic stimulus which will continue driven by the government. But overall, we would like to keep pace with the TIV growth. Several years ago, among the TIV growth, there was a time where we suspended, so we want to catch up. So we'll make sure we will keep pace with the market. And I would like to ask the person in charge of China, Seki-san. Seki-san is connected through the teleconference, so he will speak. Mr. Seki, do you hear me? Yes, this is Seki. I am speaking from China. Now, I would like to supplement what Mr. Saikawa said. Looking at the latest performance, in October, it's strong. In November, 7 working days are passed, and we remain strong. Nissan in China, we are setting forth a goal at 1.3 million units, and Dongfeng Nissan's target is 1,080,000 units. In both, these goals are achievable, and we are confident to achieve them. And this strong sales is thanks to the tax incentive on 1.6 liter and smaller ones. But this will continue in November and December. But in August and September, there was a growth close to 30%. But the growth wouldn't be that fast. In October, we haven't seen the final result of TIV, so I cannot give you a clear reply. But compared to August and September, in Q4, it will be slower. Having said that, double-digit growth is obvious. And the landing outlook for this year, including PV and LCV, more than 10% of growth is what we foresee. Compared to initial assumption, it's more than double. And next year, so far, tax incentive on 1.6 liter and less will end. So next year, Q1, we project a slight slowdown. However, in the full year basis, it's a single digit, but we foresee a strong growth, although it will be a single digit. And as Saikawa-san mentioned, our strength lies in joint venture brand. But in local brand too, we have a lineup or offer. So we would like to boost the performance here. By the way, in October, joint venture and local brand proportion was 58 to 42. So we are at 89 to 11. So our local brand accounts for a smaller pie. In other words, there's an opportunity to grow our local brand. So we have been preparing for this over the past year. And this, in addition to the new car that we are announcing this month, with the other several new models, we would like to make sure we have a steady growth. Thank you. Seki-san, thank you very much. And another question, which is about UK. You talked about negotiation, but we haven't negotiated with the UK government, by the way. In making an investment in UK, while the future was uncertain, UK government said that in order to ensure the competitiveness of the industry in UK, what kind of policy will be determined. That's what I asked UK government to disclose to us. And in this process, from our viewpoint, we perceived that even if we make an investment in a new car, we can ensure our competitiveness. So we got the reassurance out of this. So that is why, when was it? Last week, was it? That we made a decision to manufacture next generation SUVs in Sunderland plant. Therefore, the entire UK industry will ensure its competitiveness, and to this end, UK government has a policy to ensure and maintain the competitiveness of the entire industry, and we understood this. That's why we made a decision to invest. So, of course, between EU and UK government, there will be a negotiation, political negotiation. But here, we don't know what's going on. We have no way to know about this. So we want the governments to maintain the competitiveness of the entire industry. That was what we asked for. And the government disclosed us with their own policy. So that is why we made a decision to invest.
Thank you. Next question, Hans.
Hello, Hans Greimel from Automotive News. Could you give us just a breakdown about how operating profit performed in the last quarter, the second quarter? I noticed that it dropped a bit. Can you give us a couple reasons for why that happened?
I'm sorry. Do you like to know the breakdown of the operating profit down?
Yes, just for North America.
Oh, North America.
Yes.
Oh, okay. You're talking about North America.
The North American operating profit, right.
Okay. ですね、
Thank you for the question. Well, I have just explained the North American situation. I didn't talk about details. But the import of your question is that you want to know the breakdown of the year-over-year, the profit situation in North America. As I said, competition is becoming fierce in North America. Therefore, profit for us, profit margin, in terms of profit margin, there are some elements of challenges. But regarding them, then, I will ask my colleague, Peter, to explain more in detail.
We look at North America in terms of the second quarter profitability. We saw a deterioration in profit. Last year we were at 100 billion yen, this year at 63 billion yen. So roughly 37 billion yen year-over-year move. Two-thirds of that is explained by FX. It's the impact of translation of our profit in the U.S. to yen, and more significantly, it's the impact within the region of the Canadian dollar and Mexico peso impacts that we've had on a year-over-year basis that's driving the significant piece of the deterioration. And as Saikawa-san said, another piece of it is, as we're seeing in the North American market in general, from an industry perspective, we're seeing that incentive levels are increasing. Again, as Jose Munoz mentioned, what we're trying to do is to manage our business in a prudent way. If you look at the increase as tracked by J.D. Power over the first half of the year, our increase in incentives is in line with what we see in the industry over the first half of the year. A little bit lower in the first quarter, a little bit higher in the second quarter, but on balance, in line with the level that we saw for the full first half period. The other thing I'll mention is that, like all OEMs, the used car market in terms of softening prices is also having an impact on remarketing gains and losses. So when we look at that's also been negative on a year-over-year basis. So those are the key drivers. But again, when we look at the growth of the business, the business is growing. The industry overall remains healthy at what we expect to be a high plateau as we look forward. And over the second half of the year, we should expect to see some benefit from the mix improvements that Jose talked about.
Thank you, Joe.
Thank you. Time is running short, so this will be our last question up here in the middle, second row.
Asahi Shimbun, Aoyama is speaking, talking about eco car, green car strategy. Nissan last week, was it, in the first half, hybrid new Note was introduced in the market. And in the roll-off ceremony, it was last month, if I remember correctly, Mr. Gon appeared and said that not only EV, but your company will be putting efforts in plug-in hybrid and hybrid by using the partnership with Mitsubishi Motors. And without making selection, eco-car strategies will be promoted. Going forward, as you work together with Mitsubishi Motors and you have a size of 10 million units, could you reiterate the strategies of green car? EV was the driver of the green car strategies, but once again, could you elaborate on the eco car strategies going forward? And also, Toyota announced that they are trying to fully deliver and deploy the EV. In EV, you are the leader, I understand. So as Toyota exert a lot of efforts in EV and be on the full swing, they'll have a pros and cons on you. Infrastructure, parts, in these areas, these are the advantages. And awareness of the market will go up. But naturally, Toyota is a strong competitor. That's a disadvantage, isn't it? So how do you see Toyota's announcement? First off, starting from the last question, Toyota announced, or Toyota is putting a lot of efforts in EV, producing EV, selling EV. I'm not sure whether they are totally shifting to EV or not. It's up to Toyota to make a decision. And in one sense, this is a natural consequence. Well, we are not deciding for other car makers, but generally speaking, from 2020 to 2025, we foresee an age of electrification, and the car makers will never avoid EV. EV portfolio will be enriched. That's what we assumed from the initiation. So in that sense, what Toyota is doing is within what we assumed. So as you said, whether you have EV or not will not be the point of competition. The question is how attractive your EVs are, how competitive your EVs are. That's the point of competition. And probably under this capability, the question is how much you can enrich the portfolio of EV 10 years down the road, 2025. That will be the determiner of the competition. So it's a natural consequence. And against such backdrop, we would like to develop our business. So we don't think we'll be alone in this area. We never assumed this. It's within what we plan, and we welcome them. That's one. And the second point, eco-car strategies. As I said, going forward, in the next 10 years, electrification will progress. And marginal technologies will appear. Some of the technologies will become smaller. Japanese car makers have less exposure to diesel engine, but the future of diesel engine is very difficult. So how should we proceed with the electrification? In one sense, this will be a long span type of long-term progress or evolution that we foresee. Overnight, we will not shift to EVs. It's not as simple as that. By segment, we need to approach it differently. Electrification should progress differently depending on the segments. And we will look at it on the long-term standpoint. We have to think about the investment and product offer. In the market like Japan, B segment in Japan, compact cars, less than 2 million yen of the price. These are the cars. We have a lot of new technologies, but we have to package them smartly to provide them at an affordable price. And it's very difficult. It's the most challenging market to do that. So that's why last week we introduced Note e-Power. Well, Note e-Power, in one sense, is one of the propositions that we are making to the market. And we are counting on this. Well, hybrid, the word hybrid, well, we shouldn't mix everything. I don't understand the general definition of hybrid, but hybrid in Japan is Toyota's hybrid. But we don't use the word hybrid. We have electrification, which has a distinction with the hybrid. Thank you. That's all from me.
Thank you very much. That concludes our Q&A session. Thank you for joining us.
どうもありがとうございました。
Thank you very much.